Hi, this is Jeremy with Audio Professionals Northwest. In this time of crisis, we're attempting to be useful to our community by interviewing people that have information that's pertinent to current events. And I can hardly think, at least in the small business community, of anybody that is more valuable to us now than our accountants, our tax professionals, and our attorneys. So, to that end, we've got Kevin Bullock, my old friend, on the line. He's in Eugene and I'm in Portland, and there's a little bit of a delay. Of course, that's because he's in Eugene. If he was anywhere else, there wouldn't be any delay. But Kevin's been a CPA for almost 20 years and has spent a substantial portion of this last weekend reviewing the CARES Act and the Paycheck Protection Program. So I thought we'd ask Kevin what he knows so we can know it also. Take it away, Kevin.
Hey, thanks for having me. This weekend has been really kind of interesting because the SBA loan applications came out Friday, became available, and some of the banks were already contacting people on Saturdays when they were asking questions about getting their loans together, saying, "Well, we've already reached our cap, we've already reached our limit, and there's no more money to loan out." And then on Monday, I had other clients that were getting phone calls saying, "Hey, by said banks saying, hey, good news, we've secured away some funding and that may be available for you." And so what you're going to see here, I think, is much like with Obamacare, because I jokingly call this Obamacare 2, in that there's a lot of information being thrown out to us. The difference is that instead of 2,000 pages of material and we've got a few years to assimilate this, we've got nearly 1,000 pages between the FFRCA and the it's the FFCRA, Family First Corona Response Act, and CARES Act, and we have a couple of weeks before the rubber hits the road. And so, much like we saw with Obamacare, the IRS put their rules into place. Health and Human Services said, well, we're going to administer this way. We're going to see a lot of that. And I think that, I'm just speculating here, I think the government, when they were talking about what's the best way to put this all together, is probably to use the SBA program and the loans program. Right. And so, administering it, that's why one of the benefits of this is that the fees are being waived, that would normally be associated with taking these loans out. So the government is just trying to get the money to people as fast as they can, because again, the economy operates as this flywheel. Cash comes in, cash comes out, cash circles around, it bounces all over the place.
Mostly
every dollar put into circulation bounces around. Yeah, and one person's outflow is another person's inflow, and so they theorize that it bounces around the economy a good 13 times.
Wow.
Which is why when people, we see recessions, when you see a slowdown of growth. Mm-hmm. And some people are pulling things off the table, during those recessions. 2006 was really interesting in that when we were doing the tax returns, we saw what was going on behind the scenes. When banks weren't willing to lend out for mortgages, and that kind of caused that, was a catalyst in the housing crisis when all of these interest-only loans that people just were refinancing because property values were going up. All of a sudden, the banks weren't willing to lend. Right. And we saw people pulling money out. Well, when you're pulling money out of the economy, then that flywheel slows down because there's not as much. It's almost like the water in those what do you call those, the mills at the river. Yeah, I think that's where the term the flywheel came from. Yeah, that I use. So what they're trying to do is, yes, people are staying home. Government's trying to pour dollars into the economy to keep that flywheel going, which is why some of these, these paycheck protection programs, you're requiring people to stay home, and yet you want them to get a paycheck. So. And it's to keep the economy going.
A few minutes ago that I just finished listening to a interview with the Secretary of the Treasury where he's saying, well, give them a paycheck and tell them to stay at home. And as a small business owner, that doesn't compute. So I understand the wanting to inject money into the economy. I'm just not sure from a practical standpoint how well this whole
Yeah.
system is going to work. I mean, we know that the impact on
Well,
small
there,
business has been absolutely massive. I mean, in our industry, I know most of my colleagues have laid off their staff and are just hoping to weather the storm and come back
right, and
strong,
that's
hopefully sometime over the summer.
right, and that's kind of what they're trying to do with the Paycheck Protection Act is give people the cash to hire those people back, the
Right.
employees back, and then at the end of the period, if their payrolls look pretty close to what, or to that's probably better to say to the extent that the payrolls look similar to what they look like in normal times, either because you have a choice of a look back period, uh, then that will determine the amount of loan that is forgiven. Um, but for people that are in real dire straits, the payroll, the Paycheck Protection Program, if you're looking to go down that road, probably one of the first things that you'll want to do is to go to the SBA website directly. And if you go to Google and type in SBA EIDL program,
And that's the
EIDL is
economic
Economic
injury
Injury
disaster
Disaster
loans, right?
Loan. Yep,
Yep.
exactly. And you go there and start an application. Now, if you do the EIDL loan, you can't do the paycheck protection, the PPP loan. But if you get the ball rolling, one of the things that the EIDL loan, that there's a rule in there that they're required, you can apply for a $10,000 grant, a
Mm-hmm.
$10,000 advance, and whether or not you get approval for the loan or not, they're required to send that to you within 3 days. I think people that have started applying on Friday, they haven't received it yet, but 3 business days would be like Wednesday. So,
So
so I'd be looking for it tomorrow or the next day.
is that
Uh,
that's
and
three
and then
days
and
from the
then
date of your application? Because it was my understanding it's 3 days from the date of the approval of your application, but it is 3 days from the date of the application that you submitted for the
I
EIDL.
That's what I remember, to be honest with you, off the top of my
Okay.
head. I was thinking, because it was going to be direct deposited, and
Right.
I think the grant, the whole purpose of the emergency grant is to try to get you the cash.
Right.
So, and then the loan forgiveness, whether or not you're approved for the PPP loan or not, uh, the $10,000 advance becomes a grant, and then that enters into the equation of the PPP program. If you end up not going and getting a full EIDL loan, but getting a PPP loan, then that comes into play in terms of your loan forgiveness. So it is possible that gets forgiven, at the time. So regarding the PPP loan, when let's say you go down that path and you're approved, uh, and now the funding limit is another one of those things where when I read the CARES Act, there are certain, and let me switch over to notes here, because there are certain things that you can spend the money on, and then there's a calculation for how much you can borrow. So
Right.
now, according to the CARES Act, it's supposed to cover payroll cost,
Mm-hmm.
which is interesting because the payroll cost means your payroll and state and local taxes,
Right.
not federal taxes. So you got to back out the FICA, uh, the healthcare and retirement benefits, compensation, and of course you've got that $100,000 a year cap.
Mm-hmm.
Uh, the any interest on loans and debt services that you're paying as a business, and then rent and utilities. And Now, one thing that's really interesting is that in the CPE that I was the classes that I attended and the things that I read, they were saying the calculation is you take that dollar amount and you multiply it by 2.5,
Right.
so 2.5 months of these payments,
Mm-hmm.
up to $10 million. But when I read the CARES Act, I remember seeing a multiplier of 4, and
Hmm.
so that may be one of those things where that's just how it's being administered. Maybe they didn't. Maybe they rolled it out fast enough that they didn't get an update. I'm not sure. But the way that it's being applied is a multiplier of 2.5. So and again, how it's being seen in practice is I've had a number of clients tell me that when they contact their bank, that they're being told that it's just the amount that they're loaning out is just payroll times
Interesting.
2.5.
Okay.
So you may not be able to borrow as much as you thought, but as long as you spend it on those things, those are qualified expenses. And when it comes back to because after you spend it, you're going to get to go through a great fun reporting period back with the
Oh boy.
SBA where they say, okay, now tell us what you spent
Right.
this money on, and that'll be the fun part. Showing that you spent it on those things, but the things that you can spend it on are a lot more and a lot larger in scope than what they're calculating your loan amount for. So there probably won't be a lot of the risk of disallowed costs there is probably very low.
Well, and likely
The
Congress will
one
go back and
suggestion,
change the rules 4, 5, 6 times before this is over anyway. So,
it's possible because, like, even right now, well, I noticed within the CARES Act, it was either the CARES Act or the FFCRA, where they relaxed the capitalization rate for the banks to down to 8%, and that was to provide liquidity, and get more dollars into the system, but I don't think they increased the cap of what authorizing each specific bank and how much the amount of SBA loan volume they could undergo or they could lend out, and so a lot of that was, I think, one of the reasons why over the weekend a lot of banks were saying, hey, we've already got our applications in, we're at our limit, we can't really do anything for right now. So there might be end up being, as a result of that, a couple of rounds of quantitative easing, quantitative or qualitative, I can't remember exactly. I remember QE, but
quantitative.
Yeah, quantitative, not qualitative easing, right? Only spend your money on these things. Yeah. So
I'm not an economist,
anyway,
but I play one on TV.
Yeah, exactly.
So,
well, and then also the banks are one more comment is that the banks are also having this know your customer rule, meaning if you show up to a bank and you haven't had a relationship with a bank before, it's going to be harder to get in there. But so if you have an existing relationship with a bank,
you basically have to do this through an institution where you already have had an established account by the middle of February, at least from what I'm reading. Like, there's a lot of numbers in there that say 215, like how many employees you had on 215, and where did you have your lease agreements in place on 215 and that sort of thing. I think the real
exactly, and
the real sticking point for a lot of small businesses is going to be that many of my colleagues have already laid off their staff. So do they go out and rehire those people, or do they keep the skeleton crew that they've had on and pay them as long as they can and just hang the forgiveness of a certain percentage of the loan? So
I think the answer to that is it depends, because the way I read it, I would say that if you hire back your staff that you laid off, because I have clients where as soon as they saw the revenue downturn, they thought, well, okay, this is how it's going to be for the next 6 months, and so they laid them off. Knowing they'd get unemployment, but when I'm saying it depends, I think it depends on how your bank administers the SBA loan.
Right.
I think if you laid off half your staff or got down to a skeleton crew, and then you got this payroll protection loan and you hired everybody back, the tea leaves kind of tell me that it would the way I read the acts anyway, and the way that it's intended, would tend to tell me that everything would be forgiven, because you compare your payroll to any one of you've got some flexibility of look back windows, and so if you got this loan and then you ended up hiring everybody back to your pre slowdown levels, and that mirrors what your payroll looked like last year, then the odds are a lot of it's going to be forgiven. In fact, most of it's going to be forgiven.
Well, as a small business owner, I would say cash is king. So if you're going to take on debt, it's at 1%, I think, as I read, as far as the interest rate.
Yeah, the 1% rate. Yeah, it was. Yeah, exactly.
So
and in the CARES Act, it was capped at 4%.
even if it didn't get forgiven, that's very cheap money and deferred payments for 6 months. So there's a 2-year balloon, and you can deal with that in 2 years, I
Right.
guess. I don't really like to do
Yeah.
business by
And
kicking things down the road, but sometimes you just have to get through a crisis.
well, and that's the thing is that right now one of the things is you've got to show that that you're being adversely affected. And so if you've got a business where revenues are cruising right along, and I mean, for most people they've been slowed. Revenue's been really hurt, which is why they've had to lay the staff off like that. But if you've got a business where revenues are moving along, like a one person business, if you're still doing work, and
Right. Your consultants that
at
work
this
mostly from home.
right, yeah, and
And your fancy
one of the
CPAs
things is
from
you've got to
Eugene.
show that you're yeah, exactly. Well, I know, gosh, well, and I've had to pull away for a little bit. Like I've had about a week now where I've done some things here and there, but I've really been kind of trying to focus on doing this, administering this,
Hmm.
or getting learning this stuff, getting it down.
Yeah.
So yeah, which, yeah, as I said, I've talked to other tax professionals, and I'm like, I can't believe that I did 26 hours of CPE on the first week of April. This is home stretch. Yeah, this is home stretch time.
Just put
It's like
everybody on
I don't have.
extension.
Yeah, exactly. Well, and that's one thing that we're really thankful that they did an automatic extension to July 15th. I mean, bottom line is we're still trying to get everything out so that people that get refunds, they need the refunds even more than ever now. But
Question
as it
about
was, I had to kind of pull away, and yeah.
Question about payroll deposits. Have they deferred the need to make deposits by the 15th of this month for payroll taxes that have been withheld from employee paychecks, or are we still all required to make our normal deposits this month?
Well, my understanding is that yeah, when it comes to payroll tax deposits, and we haven't even
Hmm.
started talking about the employee retention payroll tax credit, or the payroll tax delay. Um, but for employers, my understanding is that the payroll tax deposits are still supposed to be deposited on schedule.
Okay.
You can reduce them by the amounts of these credits, and basically what you'll do is you'll calculate it like the employer payroll tax delay is you're allowed to defer paying the employer part of the FICA, the 6.2% of Social
Hmm.
Security. I'm sorry, FICA is both Social Security and Medicare technically, and so you got the 6.2% Social Security, you got 1.45 Medicare. You're still supposed to make the Medicare payment. You can defer the 6.2% employer shared, uh, through the end of 2020 when you have the qualified wages. And my understanding of that is when you have when you have when you have let's see, I'm sorry here,
That's all
let's
right.
stick over to my notes really quick, because this is the one I've been kind of focused on, the PPP loan.
Right.
And now, so let's talk about the delayed filing dates first.
Okay.
The filing date, as we talked about, April 15th is automatically extended to July 15th,
Right.
and they're even talking about October 15th if things get bad enough. But so if you owe money, at least you have until July 15th
I have a suggestion.
without the
Why make
penalties
us
and
pay
interest.
for 2019 at all? I'll just keep it. I'll just keep the
Yeah,
tax that
well,
I owe to the feds.
I think it goes down to the least common denominator, where you've got other people that have already paid it in, like some of us. That's it. Yeah, no, some of us, because I've already filed and I've paid them more. I've had the balances due. I've paid them. Well, no, I
Don't you
understand. I
worry,
can see
Kevin.
that.
I
That's
pay
a
them
good.
every month.
Yeah, that's cool. Well, no, it is. It's one of those things where sometimes I think our society nowadays tends to boil down to the least common denominator.
Yeah,
Uh,
unfortunately.
so yeah, no, and really it's only the April 15th pay dates that are being delayed. So
Okay.
if you like a C corporation's due date, if the fiscal year is January 31st, that means that the pay date is due May 15th. It's still due May 15th. You can still file the extensions and all that, but it's just April 15th right
Sure.
now. And I think part of that is because they expect that the 2 weeks between April 1st and the 15th are going to be the worst. are supposed to be the worst anyway for America,
I
and I think
certainly
that's
hope
kind of
so. That
why.
means we're
So
half done with them.
yeah, yeah, yeah,
So,
exactly.
as I
And so
understand it, as far as personal taxes go, at least in Oregon, they've kicked the date that those are due out to the date that the return is due, which has been extended also. Is that correct?
right, and your associated retirement contributions. If you want to make a Roth IRA contribution, or traditional IRA contribution, or a SEP, those deadlines are extended as well.
Are
So
extended as well. So, the basic
yeah,
thing I'm getting from this discussion is that yes, the bill has been passed, but there's still some implementation issues or some disparity of opinion about how this is going to be implemented depending on which agency you talk to, whether it's Department of Treasury or SBA or your bank. Nobody quite knows what the rules are yet, and everybody's just trying to do the best they can on with the information they have.
pretty much, yes.
I mean, I got a email from my bank on Friday saying, yeah, we're not opening loans, the PPP loans today on the 3rd. We're going to wait until we actually understand how to do it, is basically the gist of their
Yeah,
email. So from a practical
right.
standpoint, I mean, as we understand it now, 25% of these PPP loans can be used to pay utilities, mortgage payments,
Right.
or
Not at
leases.
least right.
And then
Yep, exactly. At
75%
least
basically has to be used for
75% of
payroll.
it.
Yeah.
Right,
So
exactly.
now you said you can't apply for the Economic Injury Disaster Loan, otherwise known as the EIDL, and the PPP loan. Now that's different than what I was reading. A lot of people are applying for them both at the same time. So do you have
Well,
any?
I think you can apply for them, and maybe that you can apply for them both, but you can't have both. But because my understanding, if you take like if you, for example, if you participate in the $10,000 grant,
Mm-hmm.
and you then and you're so if you're making an application to go down the EIDL path, and you're also doing a PPP loan application, you're probably going to end up with one of them.
Right. So
The
what I was
EIDL
reading,
is
if you
through the
get the
SBA directly.
$10,000 credit, that reduces the amount of forgiveness on a PPP loan. At least that's what I was reading on the SBA website.
That's my understanding. Yeah, exactly. I
The
think
problem
that's
is, I
my
think we're
understanding
all
too. So
confused because they're confused too. I mean, usually it's
right.
bad
Well, no,
enough.
yeah. Well, again, imagine if we all said, okay, here's Obamacare, go, and it was all up and running in 2 weeks. I
And
mean,
we had a
we had
week to
enough
do it.
problems with it. Yeah, we had enough problems with it through that entire decade of the 2010s. Oh, this is going to come into play 2015. Oh, really? Well, yeah, it's going to be a huge thing. So let's just forget that. I'm, President Trump. The first thing he did when he took office, after his inauguration ceremony, he went to the Oval Office and he signed a thing, regarding the individual penalty and the penalty provisions of the Obamacare,
Right.
the Affordable Care Act. So yeah, what they're trying to do with this is they're trying to get cash out there fast.
Right.
And I would have probably gone about a different way. I think that it makes logical sense to try to use the SBA,
Right.
because what you want to avoid is, in this day and age, when they're paying out $10 billion in refunds, and out from the income tax refunds and fraudulent refunds, that they're never going to get back. They're trying to figure out also how to prevent. There's a fraud prevention factor in here too.
Right.
A component as well, to try to make sure that the money doesn't get into the wrong hands.
Well, it makes sense to use existing rubric, and you already have a structure, so use it. That's a fairly common tactic with large
Right.
organizations. We already have this division, make it do that as well. So that, yeah, I think that makes sense. I think from a practical standpoint, it's going to be very difficult for the SBA and most banks to tool up fast enough to get this money out there fast enough to really have it make a difference, because, banks aren't set up to do 1,000,000 loans rapidly. They're set up to do 20,000 loans slowly. So, I think
Right.
even from just a
Exactly.
documentation standpoint, same thing I think you're going to see in unemployment. They're just going to start approving unemployment all over the place, and then they're going to end up billing back folks that shouldn't have gotten their unemployment benefits. I mean, that's not a very
Right.
uncommon even in times when things aren't busy, but when you're trying to
Right.
approve,
Well, and,
millions of
and when you
claims.
got 10 million applications, right?
Exactly.
Yeah, when you got 10 million claims in 2 weeks, they're going to give people the benefit of the doubt to try to get, so that people can pay their bills on an emergency basis. So the
So
the one thing I would say is if you do get the SBA loan, in terms of
the
uh,
EIDL.
make sure, what would be ideal would be open up a separate checking account and put the funds in that and use that account to pay for the things. Don't commingle these funds with anything, or else I think the accounting side and the convincing the SBA loan that you did, the SBA loan people that and the banks that you didn't use it for something else, is going to be a nightmare if you don't segregate
You're
these
talking.
funds.
Are you talking EIDL or are you talking paycheck protection loans? You think the EIDL you should have
I
a
think
separate account?
both.
Okay.
I think both. If because at the end you're going to have to account for,
Right.
okay, what did you spend this money on?
Well, that was going to be my next
Because these are
question.
federal funds. Yeah,
From the
yeah,
standpoint of documentation, I mean, most business owners are using some kind of accounting system, whether it's Peachtree or we like to call it Peach Pit around here, but Peachtree or
yeah.
QuickBooks or MYOB or some other tool. How would you suggest documenting
My
this?
my suggestion, if you don't have it already, put your mask on, run down to Office Depot, and go buy QuickBooks Pro, the basic version, for like $200. You may even get it for might even get it for less if you sign up
Or
for
even
a
QuickBooks
rewards card or
Online if you
something
don't
like
want to
that.
leave the house.
The one thing I do prefer about QuickBooks Desktop is, A, I think it's a more efficient program, and B, it's a one-time thing. It's not
Right.
$20 a month for as long as you want to have access to your
Right.
records.
I agree with you.
The QuickBooks Desktop version, you install it, you start up a new company, you answer the questions, you get things set up, and you've got it up and running. Again, that $200 is a one-time thing. So if you're not wanting to spend $20-$30 a month on on an accounting program, then I think this is the quickest, dirtiest, cheapest way to go. And again, QuickBooks Desktop is designed for the entrepreneur to get in and get out. It's designed for someone running a business during the day and coming home and updating his books at night.
And QuickBooks
So
did not pay for that plug. I wish they would,
no,
though.
I'm just saying I've seen all sorts of different things. Yeah, no, I think QuickBooks Desktop generally is, and here's where Intuit wouldn't pay me for saying this, is I think QuickBooks Desktop is generally more efficient than QuickBooks Online anyway. So,
Well,
but if you don't
speaking
have
as
multiple people looking at your QuickBooks, or if you're, as I said, one person, get in, record it, get out, I think QuickBooks Desktop is more efficient for you.
I've had it for more than 20 years, and I seem to upgrade every year anymore. So I'm still spending the $25 a month or whatever it is. I think so.
Yeah,
What you're saying is
you don't
basically
necessarily need
just
to upgrade.
keep really good
Yeah, go for it.
records. Open a separate checking account if you
Segregate that
can,
as much.
and
Yeah,
then
and it's worth I think it's worth the hassle, that because I've had other clients that were like, well, but I've already got my bank account set up, so when I pay things online, I just click a button and off I go. For that window of time when you're using these funds, set that up for this, to be able to do the same thing, make the electronic transfers from this segregated account. I don't recommend that you flea flick. Well, we transferred this money into the main checking account,
well,
and
and
then we paid it out of the main checking account.
if you open an account at the same institution, that shouldn't be an issue anyway. You should be able to use the same online bill pay system and specify what account it comes out of. I know that's the way it works with our bank.
Yeah, yeah, yeah. But the bottom line, I mean, the payroll tax deposits,
Right.
your rent, if you go online and pay rent online and all that, you're definitely going to want to show and I think the cleanest way to do it is just open up a separate account, show the funds, and those funds only going into that account, those funds only being used for those qualified expenses, and if you have to pay for other things for the same vendor, that aren't these qualified expenses, use your regular main checking account.
I think that makes a lot of sense. Then if worse comes to worse at the end of the reporting period, you just hand them a bank statement and your your check register from QuickBooks from that account, and what else, or a categorized report of
Yeah,
what
your
those
payroll
were.
registers is if you just show how everything ties out.
Yep.
It's like math problems in school. Show your work.
Well, and I think
That's really what it
that's
comes down to.
from what I'm reading, the forgiveness has to be applied through the bank that you received the loan with. And I don't know if you know this, but most banks aren't experienced with forgiving loans. They're in the business of
No,
making them,
that's
not
true.
forgiving them. So I think that
Yeah,
process is going to be interesting to see evolve as far as, how the banks can train their employees
yeah,
to actually forgive
yeah.
loans, because they're in the business of making loans and making as much money as possible on those loans, which is fine. That's the business that they're in.
Right.
What
Well,
did I
and
miss,
about
Kevin?
this,
You've
it's
got
not
to
going to be about.
go ahead.
What's that? I was going to say about well, in regards to this, the impetus of trying to get this money out to the public is to try to get out to the public, not necessarily for the banks to make money on the loans. I'm I'm certain, yeah, I'm certain that there's going to be ways that those banks are going to be taken care of too, but
Oh, I'm sure.
but it won't be. It'll the fees here. There are no fees, no SBA lending fees. The interest rate's supposed to be 1%. It really is. I think the banks are just supposed to be used as the intermediary, it's not about the making money. It's about getting this into the hands of the public so that the economic flywheel can keep going.
Well, and as we said, you have an existing structure of banks, and it's easy to work through that structure rather than creating something new. So same with using the SBA as the rubric for the EIDL loans. Well, Kevin,
Right.
anything else? What did I miss?
Um, let's see. Oh, one thing that the forgiven amounts, I think for business owners, this is really important. Forgiven amounts are not what we call COD income, cancellation of debt income, so you're not going to have to pay taxes on it.
Oh, really?
One other thing. Oh, go ahead.
I said, oh, really?
Oh, really? Okay, sorry. And yeah, and actually with S corporations, it's kind of interesting because, and I can't remember the code section specifically off the top of my head, uh, but the COD income is not only not taxable, but it increases your basis to take losses. So that's going to
Interesting.
be really interesting with S corporations. That actually provides an interesting opportunity. So if you've got losses suspended because of the lack of basis, this will actually probably could unlock a lot of those losses in addition
Interesting.
to not having to pay the money back.
Nice.
So yeah. One other thing that I want a misconception is regarding the stimulus payment. Um, that there it's going to function. I've heard some people that are throwing things out on like Facebook and stuff going,
Mm-hmm.
don't be fooled, this isn't free money, this is you're going to have to square up on this and take it off of your 2010 tax return. Well, the most accurate way to describe that, or to address that, is to say that it's much like the premium tax credit, in that you get the advance on the credit based on what you tell them your income is expected to be
Mm-hmm.
in relation to the poverty line, and then when you file your tax return, we know what your poverty line, where you are in actuality, in respect to the poverty line, so that you either square up, you either pay it back, or you get an additional premium tax credit. Well, in with the stimulus, they're going off either the 2018 or 2019 tax returns to calculate the stimulus. So if you get too much stimulus, so if on the 2020 return we're going to square it up, but the difference is if you didn't get enough stimulus, then you're going to get that as a credit on your 2020 tax return. But if you got too much of a stimulus, then you're not going to have to pay that back.
Oh, I guarantee you I'm never going
So,
to have enough stimulus. I'm just saying.
yeah, I know.
The problem is who
That's
defines it.
true. Well, yeah, well, I think that's the golden rule. He who has the gold makes the rules.
There you go.
So the government's going to tell us whether we got enough stimulus or not.
I agree with you. I think there's a lot of confusion, and I guess I see it sort of as back in the day, to stimulate home ownership in 2006 or 7, they were actually giving homeowners like a $8,000 interest-free loan. And if you sold the property, basically you just reconciled it out on your tax return the following year. So it'll be a very similar situation.
And there were some that jumped on that and got the 15-year loan where, it was where
Mm-hmm.
like the first thing, I think if I remember correctly, you got $7,500. And then you could repay that 15 years at $500 a year.
Right.
So then they came out with an $8,000, and if you sold the house at a loss, or I can remember there were ways that could be forgiven. Well,
Right.
but they didn't grandfather the 7,500 people. So there were folks that had that on their tax return for years, because actually some of that that's just coming off now.
Right.
So yeah, no, that was really interesting. So they're trying, and they're doing their best. I have confidence in that. The ways that things are implemented might be limited by the departments and the governmental agencies that are administering it, and then on down to the banks that don't want to get exposed, or and want their risk mitigated. So they're doing their best. I'm fully confident in that, and we'll see. I don't think this will be the last round of economic easing. I think there'll probably be some more, especially as we try to clean things up and get everybody back to normal.
Well, Kevin, I really appreciate you joining us 8 days before April 15th, which, if anybody knows, most accountants are holed up somewhere in the dark with long hair because they don't have time to have their hair cut, and just working 12, 16, 18 hours a day trying to get those tax returns ready to go. But hopefully...
For the record, I have a hairstylist that's here isolated with me, so...
I wish I had
If we'd have
one.
done this yesterday, it would have been much longer.
Well, we really appreciate your time, Kevin. How can people get in touch with you if they need a good CPA?
Phone number 541-914-4339, or shoot me an email, which is kevinbullockcpa@gmail.com.
Nice.
I'll respond to those as fast as I can, but again, as Jeremy mentioned, it's April 8th. It's the home stretch.
It's tax time. Yeah, I was calling my accountant every hour or two last week to just see where he was at. He told me if I'd stop calling, he might be able to get the return done. But, what can I say? Appreciate your time, Kevin.
Yeah.
Stay safe, my friend.
My pleasure. I hope
day.
this helps. Thanks. You too. Bye.